roll out a brand new concept in innovation sponsorship. Direct investments in thoroughly vetted, high-quality inventions. That is, we're going to show you a way to invest in innovation without the expense and risk associated with investing in startup companies. So let's begin. First of all, welcome. In this presentation, we're going to walk you through a brand new business concept called Archimedes Offspring, or AOS, and how you can use it to invest directly in new, high-quality ideas and inventions. Why did we crown this organization with such a strange name? We call it Archimedes Offspring because it's all about the children, metaphorically speaking, of the ancient Greek scientist, engineer, and inventor known as Archimedes. Who are these metaphorical children? They're all of the inventors, past and present, who have come down through the ages to create and innovate the modern world. For us, at this moment in history, it's the current generation of U.S. inventors who, whether they know it or not, owe a debt of gratitude to Archimedes for paving the way. But to the point, one of the core beliefs of the AOS organization is that these modern-day U.S. inventors and their investors have been misserved terribly by the current paradigm of innovation in the United States. What is that paradigm? It's the startup company. Instead of investing in startups, Archimedes Offspring is all about investing directly in inventions, thoroughly vetted and high-quality inventions, and in the process, helping to reinvigorate innovation in the United States, which, unfortunately, has fallen on hard times over the last several decades. Let me explain. Among many problems, a very troubling one for the U.S. is that U.S. innovation has become stagnant. For every breakthrough in innovation, like Elon Musk's electric car or his SpaceX rockets, there are literally thousands of mediocre or useless ideas embedded in companies that are Uber or Airbnb wannabes, almost all of them venture capital funded startups. These startups suck up investment dollars and divert resources from potential world-changing ideas and inventions. Here's a quote from one of a host of publications and articles appearing over the past decade precisely on this point.
In the century after the end of the Civil War, an economic revolution improved the American standard of living in ways previously unimaginable. Electric lighting, indoor plumbing, motor vehicles, air travel, and television transformed households and workplaces. But that era of unprecedented growth ended 50 years ago. When you compare the rate of innovation over the past 50 years, for example, Uber, Facebook, Amazon, etc., fueled by venture capital and other forms of private equity, against the life-altering scale of innovations between 1870 and 1970, it becomes abundantly clear that innovation in the U.S. has slowed to a crawl. And despite the advent and unprecedented growth of venture capital, that golden century of American innovation is not likely to be repeated unless we can find new ways to tap hidden innovation. And that is innovation which, as it always has been in the past, lies dormant in the minds of the ordinary American citizen.
From this observation, and many others that have appeared in popular newspapers, magazines, and other articles, it's abundantly clear that U.S. innovation has been and it currently is stagnant, and that venture capital and the venture capital funded startup model is not the answer. Along these lines, take a peek at what just one of America's most highly regarded venture capitalists has to say about this situation. But it's actually worse than Fred Wilson would have you believe. Instead of helping, venture capital actually makes the situation worse. It does that by hurting both the retail investor and the independent inventor. In the case of the retail investor, it results in capital being diverted from the public markets, with the consequence that the general public can't get in on the ground floor of any significant new idea or development. In the case of the independent inventor, on the other hand, because venture capital only funds teams, which are both expensive and time-consuming, first to put together and then second to maintain, the inventor, who more often works in solitude, is left out of the funding tent entirely. As a consequence, they are unable to pursue the next enormous breakthrough idea, one that perhaps might impact the world in a much more fundamental way than the legions of ordinary Me Too ideas that get funded by venture capital every year. But that's where AOS comes in. AOS is a two-sided market web-based solution that puts investors together directly with inventors, or rather with their outstanding ideas and inventions, to fund, develop, and then commercialize these new innovative ideas and inventions. The way that this is accomplished is through a series of investment funds and their related families, with each family dedicated to one industry, or in larger industries, one market segment, and with each fund housing hundreds or even thousands of inventions and their associated intellectual property. Investors invest in the funds, and the funds invest directly in the inventions, and not through startups or by investing in a company's stock. Meanwhile, the independent inventor gets the funding and professional help needed to bring their idea to fruition and to commercialize it in the marketplace. A win-win for both the inventor and the investor, and just as important, a big win for the world at large. But what about market validation, you ask? AOS, as both an entity and as an approach to the funding, development, and commercialization of inventions, is in fact a new concept. However, its market validity has already been tested and demonstrated by the patent aggregation firms that have cropped up over the past several decades. For example, one of the most significant players in the IP aggregation space is Intellectual Ventures, a company that was founded by some former Microsoft IT professionals and is backed by Bill Gates, several Fortune 100 companies, and a variety of private equity firms, including the legendary Charles River Ventures. While the AOS model was developed independently of the Intellectual Ventures model, that is, without any prior knowledge of its existence or any attempt to copy the IV model, nevertheless, the two models are strikingly similar. However, in the important ways that the two models differ, the AOS model is noticeably superior. For a deep dive examination of why the AOS model is superior, the reader is directed to the AOS white paper entitled Archimedes Offspring, a new, more profitable twist on a previously proven successful model. This white paper can be found on the AOS website at www.archimedesoffspring.com. Okay, as we've already stated, AOS has two markets: independent inventors needing funding, mentorship, and support, and retail investors looking to get in on the ground floor of the next big thing and looking for more security, stability, and return than the public markets have historically provided. When it comes to AOS's first market, the independent inventor, public records have revealed that at any one time, there are approximately 1.5 million independent inventors. That is, people not affiliated with a large corporation who've taken the first step toward realizing their inventing dream, for example, by doing a product search, hiring a patent attorney, filing a patent application, etc. For the vast majority of these independent inventors, there is, or in the future there will be, a need for outside financing and support in order to bring their ideas to fruition. In addition, it's been estimated that there are more than 11 million people who would be inventors, except for the fact that they have no money to pursue their idea, or have no support, either emotional or financial, from family or friends, or are afraid to take the first step, or just don't know how to navigate the inventing process, or even a combination of one or more of these things. The AOS model can help an inventor or wannabe inventor to overcome each and every one of these obstacles. When it comes to AOS's other market, the retail investor, the numbers are even more impressive. There are over 50 million retail investor households, of which over 50% have savings accounts or 401ks or other investment plans. And while Americans fled to savings accounts and other forms of passive investing after the crash of 2008, in recent years those folks have returned in droves to the public markets once again. In addition, there is an estimated 70+ million millennials, many of whom are attracted to alternative forms of investing, having lost faith in the traditional public markets as a consequence of what happened to their own parents during the financial crisis of 2008. AOS's products consist of ideas that have been turned into working inventions, along with the intellectual property associated with those ideas and their expression, such as patents, trademarks, copyrights, and trade secrets. Intellectual property, a form of knowledge, is what powers the modern world. Companies like Apple, Google, Microsoft, and others have become household names, and all of their businesses, without exception, have been built on the bedrock of intellectual property. As you can see from this slide, AOS consists of three pieces: a business trust at the top that bears the company name, a management company, and a series of family funds broken out and dedicated to various industries or industry segments. For a more detailed description of the AOS business model structure, the reader is referred to the AOS PowerPoint presentation, which can be found on the AOS website, which is, as we've said before, located at www.archimedesoffspring.com. AOS exists to sponsor and manage, through an affiliate, all of the investment funds that it creates for the purpose of investing directly, that is, directly and not through startups, in partial ownership of the inventions and associated intellectual property that AOS helps its inventor clients to first create and then commercialize. These partial ownership interests can range from as little as 10% for those inventions that are truly game changers to as much as 49% for those inventions that are commodity products for which there is a proven existing audience. In exchange for their assignment of a partial interest in their invention, an inventor can receive financing ranging from as little as $10,000 to as much as $75,000, with the precise amount dependent upon the amount of percentage interest assigned by the inventor to the AOS-sponsored fund and the amount of money needed. The funds are distributed in up to a maximum of 3 tranches, with each tranche ranging up to $25,000 apiece. Of course, the actual distribution of the cash is dependent upon the inventor meeting certain milestones as he or she moves through the invention development and commercialization process. But how does an AOS-sponsored fund ultimately exit from one of the investments it makes? Actually, there are no less than 4 different possible exits. The particular one that's ultimately chosen is negotiated beforehand with the inventor, subject to change in certain cases, before any funding is provided. Briefly, these exits are: 1, through a licensing agreement with an independent third party and the payment of royalties over time; 2, through a direct sale of the invention and its related IP to an independent third-party purchaser; 3, in the case of bridge loans, by repayment by the inventor of the loan principal plus payment of an interest at an annual rate, subject to negotiation on a case-by-case basis, but not less than 15% per annum, compounded annually over the life of the loan; and lastly, through an inventor buyback of the interest initially transferred to AOS in exchange for an amount to be negotiated, but in any event, not less than 2 times the total amount invested by AOS in the invention in the first place. What about market adoption by inventors of the AOS concept? The AOS concept, including the teams selected to bring that concept to life, have already found wide acceptance in the independent inventing community, including with such organizations as the U.S. Patent and Trademark Office's Pro Bono Patent Application Program, the United Inventor Association, the U.S. Inventor Organization, as well as with inventing celebrities, manufacturers, and licensing agents and organizations throughout the United States. Market adoption of the AOS concept by investors has been strong as well. For instance, the success of intellectual ventures in attracting capital from some of the most financially sophisticated individuals and institutions in the U.S., and the significant similarities, subject to the important differences between the two, of the AOS business model and the IV model, is ample demonstration of the already established market acceptance by leaders in the financial investments industry of the AOS strategy of direct investments in intellectual property. What about competition? While AOS does have competitors in the patent aggregation business, the differences in the AOS model, for example, the carefully homegrown nature of its intellectual property, will lead to substantially greater success in both the vetting and managing of an IP portfolio than has been the case with its competitors in the past. Additionally, with the exception of intellectual ventures, which is guided by recognized experts in the tech industry, but which is not open to investment by members of the general public, none of AOS's competitors have the breadth and depth of experience in both the inventor servicing industry and in the investment services industry to match that possessed by the AOS management team. So what are AOS's competitive advantages? First, practically speaking, a virtually unlimited pool of established and newbie inventors representing thousands upon thousands of new ideas and inventions. Second, deep industry experience in both the inventing realm and the financial services industry. This will ensure that only the very best of these new ideas and inventions will receive funding. Third, an investor pool of more than 50 million retail investor households that are hungry for ground floor access to the types of innovations that traditionally have only been made available to venture capitalists and angel organizations. Next, modest investments capped at $75,000 with outsized returns. No risk here of chasing bad investments with new money. Next, the potential for greater investment diversification is virtually unlimited, potentially thousands of inventions in a single fund versus only 30 companies in a venture capital portfolio or 300 companies in a typical mutual fund. And then last, very modest and well below market compensation for the managers responsible for managing the businesses. Virtually all the compensation that they receive is tied to performance of the investment fund's shares. In exchange for what AOS is willing to offer in the way of equity participation in its first outside financing, AOS is asking for an investment of approximately $1.1 million. The proceeds from this offering will be invested as set forth on this slide. Lastly, we come to the pro forma financial projections. Here it's important to note that other than information for the current year, which will be provided separately, the information reflected on this slide relates only to the performance of the funds themselves over the next several years and does not reflect or take into account the significant benefits that will accrue to those investors who invest in AOS's first outside financing. Specifically, those individuals or organizations will acquire not only the 200,000 shares of the first fund, the Da Vinci Invention Investment Fund Roman numeral 1, which is a Delaware corporation, but also an equity participation in the AOS Management Company, AOS Management LLC, the exact percentage of which remains to be negotiated. This second piece of equity participation in the AOS business, which is available only for this first round of outside financing, will provide significant additional benefits to its holders as the initial fund grows and as subsequent funds are rolled out in the future. For the precise details of this extra piece being offered to first funders and the potential financial benefits to be derived from it, the reader is referred to the Archimedes Offspring offering document and related business plan, copies of which can be obtained by qualified purchasers by writing to AOS's Chief Operating Officer, R. P. Baraska, at the company's address.